Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about, yes, you guys guessed it, swing trading. You guys know I've been a full-time swing trader for 6 years. So in today's video, I wanted to jump in and really talk about pretty much how to make sure a stock is on a support. How do you buy those dips? We always hear this expression of buy low, sell high. But how do you buy those lows where you buy it low and then it reverses, and you don't buy it low and then have it go lower and lower and lower? So we're going to be talking about some strategies and techniques that you guys can start implementing in your swing trading strategy. So I hope you guys all enjoy this. If you guys have any questions, feel free to ask down below. And if you guys want to learn more about swing trading, check out my swing trading school where you guys can learn everything about swing trading, how to find stocks with opportunity, my strategies, my mindset. And right now, you guys can use code YouTube to get 20% off. So check it out. It's only valid for this week. So check it out down below. Sign up. I'll see you in there. It's absolutely fantastic. We have private live streams, group chats, quizzes, lectures. It's great. And trust me, guys, I know when you think of YouTubers selling courses or online schools, you think it's a scam. I get it. But I'm telling you, it's different. Check it out down below. You guys can see it's absolutely worth the investment. And guys, let's jump into this here. So looking at this stock here. This is a stock that we're actually holding here. We're up a little over about 7-ish% on this trade here. Now, one of the reasons why I absolutely love it is because, one, we have an upward trend. Now, for me and my strategy, I'm a long trader. Now, what that means is I buy low and sell high. Some people are short traders where they short a stock high and they're betting for it to sell off a little bit. Me and my strategy, it doesn't work well for it. I like finding stocks that are undervalued and try to buy them low and sell them at a higher price. So getting back to trends are super important because if we have an upward trend, that's just a higher indication of getting buying pressure, because that is what I want. That is what I need in order to be successful, is buying pressure in my position. So let's look at this trade here. Ticker symbol MRVL. Now looking here, one of the reasons I absolutely love it here is we have that nice upward trend. In the past 6 months, the stock has gone from lows at about $45, hitting highs at $85. So we know it has a very, very strong upward trend. Another thing that I love is moving average lines. Now, moving average lines, for those of you that don't know what they are, moving average lines are trend indicators. So what this means is you can look at it, instantly know the direction of the stock. On top of that, what they act as is support and resistance. When the stock is above it like it is up here, we've seen tendencies of stocks getting buying pressure on these moving average lines, as you guys can see, right? It hits them several times, establishing a lot of support there. Now, for those of you that don't know what support and resistance are, that is, technical analysis 101. But I got you guys. In simple terms, support is where we get tendencies of getting buying pressure. Resistance is just selling pressure. So that's what we actually look for, is a stock on an upward trend with some sort of support. Support could be a certain price. Maybe a stock has tendencies of getting buying pressure at $1. Maybe the stock has tendencies of getting buying pressure on a moving average line. So for me and my strategy, I love to have as many indicators in my favor as I can. Now, the reason why that's very important for me is because I want confidence in my position. I want to understand that this stock I'm buying isn't just going to sell off, and I get stopped out. I want the stock to reverse. So let's actually talk about how to do that. So looking here, you guys can see that the stock hit this red line. Like I mentioned, these lines are moving average lines, but there's a difference between the blue and the red. The red is what we call the 200-day moving average line. It's an overall very, very hard support for the stock. We've seen a lot of great hedge funds buy it at the 200 moving average line. A lot of retail investors get it there. Normally, we just have a little higher volume, which will often lead to a little more buying pressure. Now, the blue line here is the 90-day moving average line. This here is still a fantastic moving average line where I've traded time after time again with buying pressure. You guys can see, right, there's a ton of great opportunities there. But looking here, you guys can see it's just not as strong as that 200. So we understand the stock is one on a support line because it's on that 200-day moving average line. The other indicator I use is something called the RSI line. The RSI is the relative strength index. And don't worry, with Moomoo, the broker I'm using, I'll show you how to implement all of them in your charting. And if you're not signed up with Moomoo, you're missing out because they're the best broker in my opinion. I'll put them down below. You guys can get 15 free stock by signing up. So just sign up. And guys, looking at the RSI, the relative strength index pretty much captures momentum. It determines if a stock is undervalued or overvalued. And in my personal opinion, this is another really important indicator because you want a stock on a support line, but you also want the stock undervalued on the RSI. So looking back here, you guys can see that the stock was trading for near and around a 22. Let's go back and look at the last time it was trading for a 22. It was all the way back in here where the stock went from 45 to about $60 a share in the matter of 2 or 3 weeks, which was a great swing trade. So looking here, we have a lot of indicators in our favor. Another thing that I always like to do is I go to the 1 hour chart. The 1 hour chart just gives me a general direction. Now, the reason why I say that is because looking at it here, you guys can see these moving average lines still play a very, very important factor for this stock. You guys can see when the stock sells below it, like I mentioned, we've just seen a lot of selling pressure and resistance there. So you guys can see it hits it. We just see a lot of sell-off. Now, you guys can see the stock break out. The last time it broke out, you guys can see that the stock went from about $68 to about $76, which might not seem like a huge deal, but percentage-wise, guys, that is near and around an 11% return. And I will tell you, I will gladly take an 11% return compounded. If this just takes, let's just say 2 weeks, 11% bi-weekly is fantastic profits. So you guys can see every time or most of the time where we get that breakout of these moving average lines, we get a decent growth. So it sold off, pushed up, and now it's already squeezing its way up. So my profit target for this stock is going to be near and around the $74 mark, which is that old resistance where we've seen a lot of sell off there. So that's going to be pretty much our target price for this stock. So understanding, is this stock selling off? You guys can look at the 1 hour chart. You can look at the RSI lines. You can look at moving average lines. And how to add them? It's super simple. All you got to go to is that gear icon, manage indicators, click EMA, scroll down to RSI. As you guys can see, boom and boom, just like that. So this is a very, very easy thing that you guys can do to make sure you guys are buying those dips. Now, if you guys want to learn more about swing trading and pretty much how to find these opportunities, check out my school. It's absolutely fantastic. And I'll see you guys in there. Like, subscribe, and we'll see you guys tomorrow. Take care.